Abernathy Industrial is a 6-tenant industrial park located in the Greenville-Spartanburg submarket in South Carolina. What's unique about Greenville is it's actually one of the most dynamic industrial hubs in the country. And that's something we focus on specifically at Lightstone, is acquiring well-located Class B shallow bay industrial real estate in high growth markets. And Abernathy Industrial is a great textbook example of the types of properties that we target. The property is fully leased to 6 tenants, and the rent roll is currently below market, with rents anywhere between 5 and 15% below where the market is today.
When you own and operate millions of square feet of industrial nationwide, you see what's actually happening on the ground. In many instances, our footprint gives us the unique ability to identify trends before they show up in third-party data providers, like which submarkets are seeing rent growth, how occupancy is faring, how expenses are shifting. That kind of insight directly informs how we underwrite new investments.
One of the things we focus on at Lightstone is affordability, and that's why we like the Class B shallow bay industrial segment of the market. In Greenville specifically, average vacancy across the shallow bay industrial space is less than 5%, versus what we see in big box industrial spaces that are anywhere from 500,000 square feet plus, where you see vacancy rates at north of 10%.
What sets Lightstone Direct apart is it's about giving investors access to the same quality, rigor, and alignment that institutional capital demands through Lightstone as an institutional sponsor.
In every deal we offer through Lightstone Direct, we invest at least 20% of the equity ourselves. That means we have real capital at risk, the same outcomes as our investors.
One of the biggest concerns we hear about from investors that are considering investing in industrial real estate is what happens if one of these businesses fail or choose not to release at our property. And one of the things we like about this market specifically is, one, when we look at the property, over the course of almost 30 years, the property has had only 3 months of downtime, and that speaks to the market and that speaks to the property itself. Secondly, when we look at the Abernathy industrial park, what's unique is that our rent roll is approximately 20% below what other new Class A shallow bay properties are currently achieving. So as an example, we're earning rents of anywhere between $5 and $6 a foot. That's what we need to make our math work and to generate an adequate return to our investors. Where if you are invested in a new Class A shallow bay property in that same market, you need $8, $9, $10 a foot triple net to make your math work and to earn a return. And so why we like this park specifically is that it's got true competitive advantages, and we think that's going to translate to strong returns to investors over the course of this 4-year hold.